Hey everyone, welcome back to the Mark Loeffler Experience. Today, we have a report from Oxford Economics, which is actually a pretty respected economic forecaster, that Canadian real estate prices expected to drop 24%, but they can drop up to 40%. What does that mean? Well, let's read into this a little bit. As Don Campbell would say, which I'm going to reach out to Don right now after this video and we're going to get him on here, okay? We're going to open the curtain, as Don Campbell would say. Let's look behind the curtain. Canadian real estate prices might be in for a bit of a dip if one of the world's leading forecasters is right. Oxford Economics' latest forecast shows home prices falling 24% by mid-2024. 24% basically takes us back to this time last year. I'm just putting that out there, that 24% takes us back to this time last year. But okay, higher interest rates and anti-speculation policies are forecast to begin the price declines this fall. If these measures fail to correct prices and they rise further, a crash of 40% and a financial crisis is expected. Wow, financial crisis. I kind of just don't see the financial crisis aspect. Could prices fall 24%? Yeah, I guess. To be honest with you, markets like Ontario, there's still a severe lack of housing. And I get that Oxford Economics, I don't know, would they take that into account? Hey, if anybody knows anybody at Oxford Economics, let's get them on the show because I want to talk to them about this. I love this stuff, man. I love to geek out with economics. Firm sees a substantial decline in home prices, but not enough to roll back to pre-2020. Obviously, like this would take us back to early 2021 right now. This is why I don't like national stuff. And when I do national stuff, I want to break it down market by market because there's still good deals to be had in different markets. And you can buy a good deal in any market. That's why, so when they talk to a 24% decline, obviously, we just talked about like Oakville, they're up 40%, which is $500,000. Toronto's up massive. Windsor, London up 40%, right? So it's one of those things where it's like, is it going to be Toronto, Vancouver, Montreal that are going to lead decline? And I don't see it in Montreal. Like they've not seen the 40%. Right? They've seen a good solid 20. They've been national average and they represent a huge portion of the statistic people are looking at. But I think there's still obviously deals out there. So prices have increased 50% since the Bank of Canada began cutting interest rates and printing money like a son of a... Even with this correction, the firm expects prices to be 15% higher than 2020 levels. So pre-2020 when, the world was normal, which hopefully, knock on wood, we're there. Here's obviously the forecast average house price. Like they're basically saying average house price in Canada is over 800,000. So we're there. So we're going to see this decline pretty rapidly over the next 2 years. Yeah, we're going to fall. And right here, we'll zero in on this. This is like the pre-COVID era, right? 2016 house prices peaked. We went to this little standstill and we went up. So they're expecting us and then slow rise again. I would have loved if they had drawn the average price graph on there, but to be honest with you, I don't think they're taking into the fact that inflation is as high as, they must. These are smart people, right? But obviously, if this is the case, then house prices won't have kept up with inflation, with real inflation. I don't see that happening. I don't see the prices of me building a home going down that much that it's going to change this. But time will tell. I think I'm positioning myself personally again out west, and they're expected to lead the country in growth, economic growth and house sales growth, as per our last video on Monday. We'll put a link down below if you want to check that out. Obviously, they don't expect home prices to bounce back quickly afterwards, which, to be honest with you, I've been calling for this for a bit, that we're going to level off. They see supply outpacing demand and keeping annual growth under 1% for 5 years. So there has to be a huge change in government policy in Ontario, which is the largest real estate market by far, to have any significant change in the supply. The forecast is an ideal combination of price declines and stagnations, minimizing fallout. If this were to happen, they don't see a recession or significant economic drag. Most of the price declines would be unrealized by owners because, again, we haven't sold, so we haven't realized the gain. So we wouldn't, if we don't sell, we're not going to realize a loss. And by the way, like if you've owned your house for 10 years, like I have, well, you're still going to have, a lot of equity in your home So the only people who will be hurt are the people who want to flip homes or who are taking a short-term view on the market. They're buying for profit and then they're trying to sell in 6 months and they get burned in this. Like, that's a pretty rapid drop. To be honest with you, if this does happen and we see this playing out, then my advice to people who want to sell in this type of market is you got to price ahead of the market. Don't price behind it. I've seen this before. Like, I was selling houses in 2016 where somebody would put it and they're like, oh, we drop it and then it's falling as it goes. Just get ahead of the market, guys. If that's what's going to happen. I don't see this and I don't see the drop off there, but just 2 years ago, the firm didn't consider such a significant decline in prices possible. Obviously, then we had a boom because they printed tons of money and the cost of everything went up 5, 10, 15% inflation, depending on where you're looking. They also feel that stress is unlikely, but if they think if we keep going up that they see a 40% drop, which again, if we go up another 10, 16%, which is likely, then again, we're just back at 21 levels. They stress that the 40% is unlikely, but the 24% drop in their base case scenario can result in further fallout. Further research is needed in the area which they plan to update us with. Obviously, they're using nominal price data. Well, they talk about inflation playing a huge role in affordability. Yeah, we know that. Everything's costing more. You guys try to buy cars or trucks lately, or used vehicles have gone up stupid. So they're thinking that obviously our pricing is going to be below the inflation target, which is 2%, which I don't see we're hitting 2% inflation in Canada for the next 5 years. I don't think there's any way that is possible. So the alternative, if the disconnect is preserved, results in long-term economic damage. Both the leverage required and perpetually diverting cash flow are big risks. So basically, they're talking about how much it is to take out a mortgage. We're diverting cash flow from living to paying for housing. Every dollar spent on housing is one not put into more productive parts of the economy. Cities prioritize home price growth ahead of local economic growth. Future economic growth is stifled. And to be honest with you, that's kind of, I think, happening in Ontario because you can't find any place to live. Because again, we're not building enough homes for everybody who wants to live here. So even when that happens, city and countries providing a better value proposition become more attractive. Like that, and that's why we're seeing this already. We're seeing people go to Nova Scotia. We're seeing people go to out west. Why? Because we talked about this in the last video. For the price growth that's happened in Oakville, you can sell your standard home in Oakville and buy that same standard home in Nova Scotia with the price gain. You can buy that in Calgary with the price gain. Like, you can buy a mansion with the price gain in Edmonton. And this is the thing with economics, right? It's an inexact science. Home prices are overvalued by 91%. Again, obviously unrealistic to correct. Supply issues are overblown. Supply fixing Canadian real estate is like using a squirt gun on an inferno, says BMO. One of the biggest red flags for Canadian real estate bubble is that banks have become prominent critics. Douglas Porter says this isn't a supply issue. The bank warned last year that price growth would accelerate without demand measures. Instead of taking that advice, policymakers doubled down on the supply narrative. After a year of delivering a near record supply of new homes, which is still not enough because we haven't built enough new homes over the years, and Douglas Porter should know that because he's a pretty smart guy. Overall, supply is a small part of the issue in Canada. Overall, in Canada, I'm going to agree with that. I'm saying that it's a supply issue in Ontario. I'm saying it's a money printing and inflationary tool in the rest of Canada. In some places like Edmonton or Saskatchewan, they're not even outpacing inflation with their price growth. So many contrary opinions out there, so many different things we can read, and we can all go down these rabbit holes. At the end of the day, if you're buying something that you can add value to, I think you're going to do super well over the next year. If you're just buying brand new, turnkey, who knows? I don't think inflation's going anywhere in the next little bit. I think wages are going to increase to reflect that. Rents always catch up with demand here in Ontario. So if you own rental properties in Ontario, they're not building enough rental properties. For sure, they're not. So rents are going to go up. It just have to be patient. So at the end of the day, are we going to see that 40% drop? Like, are we going to see this 24, 40% drop? And again, if it did happen, Are you prepared? Are you buying cash flowing real estate that can sustain you through these times? To be honest with you, I would like to see that much more normal market, because I'd like to go in and buy something, increase my cash flow, have that more predictability. Like these price increases, while great if you own things, of course, make it hard for newer investors, newer home buyers to buy into the market, which is not good in my opinion. Again, like we always say, time will tell. And comment down below, are we going to see that 24 to 40% price drop? And if we do, where, when, how? Let me know. Comment down below. Smash that like button for the YouTube algorithm. Thanks everyone. We'll catch you next time.